Anyways, look, so let's say the bias for the day is bullish, right? So for instance, like you're now assuming that this is what's happening for the day. So as this is printing for the day and we're making our way up like this, right? What's happening on a small time frame is you could also just be doing this. So this could be the higher time frame, and then obviously on a smaller time frame. Oh shit, sorry. My bad. Let's say this is the day bias, right? It's bullish. This is the daily candle closure. Like let's say this is like the daily time frame. So let me go ahead and mark this up as the daily time frame. So this is the daily time frame right here. And then let's go mark this up as the let's say the 4 hour time frame, or the 1 hour time frame we could do. All right, so let's say this is like the 1 hour time frame. So over here you have 1 hour time frame. All right, so that's the 1 hour time frame. I'll go ahead and change this up, make it a little yellow. All right, so this is the 1 hour time frame. Let's go ahead and divide this up as well, just so it's a little clearer. All right, cool. There's a line in the middle. All right, so if this is a daily time frame and the bias is bullish for a day, right? What you could be expecting on a small time frame is obviously you're not just gonna push up. It's very rare where you just see price push up like this. I'm sure it happens a lot, but not that often, to be honest, right? Like when do you guys ever see prices push up like this for the whole day for one single bearish candle? I'm sure there's a major catalyst, sure, but typically you see bearish candles in between, right? You'll see at least a doji bearish candle or like a bearish candle back into the range or something, right? Very rare where you just push up like this. So what that means is that like you have to create structure on the way up, right? So you might see this on a higher time frame. You could be bullish, but then again, on the smaller time frame, what can happen is, let's say this is a 1 hour time frame, you can also just be pushing up, and on your way up, you can be closing bearish, creating structure, right? Because price sometimes will likely need to grab liquidity before it drives in the direction it wants to drive into, because price needs to grab orders to drive up towards the next area of orders, right? So for instance, if you're making your way up like this, right, you might get a candle that looks somewhat like this. So for instance, you're pushing up, all of a sudden you have a bearish candle that comes down, breaks the lows, and then flips bullish, right? There's nothing wrong with taking that pull there, right? But you have to understand, like for instance, my bad, let me just finish the candle off. Like there's nothing wrong with taking this pull here, because this candle at one given point was bearish, right? You were bearish here, and what happened here was you pull back, create a bottom wick, and then you start to flip bullish again, right? But at one point, this was the candle. It was a bearish candle looking somewhat like this. So what that means is that at any given point, yes, price could pull back into the range, grab liquidity to drive up, but that doesn't mean you can't take those sells, right? You can take these sells, especially if looking left. Let's say for instance, like before you had this entire pull here, you had bearish candles going up like this. So let me just finish drawing this. Right, let's say like this is how the structure kind of look like, right? So for instance, like you're bearish at one point, and then there's like some type of minor resistance here, cool, right around here, right? So if there's like the resistance formed on a smaller time frame, and on a smaller time frame you close that resistance, which means you're at a level where price it might struggle at, right? You see price come down here for a bottom wick, and on a smaller time frame, you might see some type of bearish closure here. You can take the sells down for this bottom wick, but again, you have to understand what part of the cycle you're in. You can't just take short-term sells and expect to swing the sells and expect an all-time reversal down to $0. Right? Some of you guys be exaggerating it. Like you guys are looking for shorts, all of a sudden you go from looking to catch 10 pips to catching 500 pips. Like, bro, you know, you can't forget what the original idea was when you got into that trade in the first place, right? So like, yeah, you could be looking like this on a higher time frame. You could be having one bullish candle, but on a smaller time frame, you can be printing structure, and that structure could give you room for you to drive back into the ranges. Therefore, you could reject, and you could grab this pull here. We've done this plenty of times. Like on Friday, we grabbed that move on gold. That move, I think the move we grabbed was the buys. Right, and that buy was the top wick on the daily, but we understood that, and that's why we weren't expecting anything crazy, right? So Friday's trade was basically based off of, if I'm not wrong, I'm pretty sure it was off of this candle here, if I'm not wrong, right here. This 15 closure at 9:30, right? No, where is it? It was 15 close respecting support. So it's this one right here at 8:30, and then we caught this pull right there. Yeah, so it was basically off of this candle here to our left, chat. It was off of we caught this buy here, right? This is the trade we got into on Friday, right? But you see how we understood that could potentially be a top wick because the daily bias was heavily still bearish that day, right? The bias is still bearish, so we understood that at any given point we could drop down, and our original target was 2007 that day, but we still managed to get buys because we understood that before this candle does anything else in this situation, it must come up to grab liquidity, right? So in this case here, you happen to close on the 15-minute candle with no bottom wick or resistance support, and then the 5 candle closed bullish back into the ranges, which indicated that we could push up to fill the wick, and that was a move we caught. We caught this move, we closed full, but we understood that, right? And we closed full there and expecting that price could possibly drop down for the rest of the day, and that's completely fine, right? There's nothing wrong with doing that at all. So you have to get used to that. You have to adapt to the current market structure on the smaller time frame, not just the higher time frame bias, because that could throw you off some days. I used to be at a point in my career as well where I would used to like literally only take trades with the bias of the day, and it's fine. You can do that. It's cool, right? But do you wanna do that and sell down for a 7% win rate, you know, or do you want to evolve and get past that and get better? Right? You want to get better, obviously. You want to be able to read the markets in and out, like at the back of your palm, right? And to do that, you have to evolve. You can't just always be comfortable at where you are reading price action, right? I see a lot of traders get comfortable and they never evolve, right? That's cool. That's fine as well. You can still be a profit trader by not doing that, but again, you want to be able to push yourself to a limit and see how far you can go by reading candles, right? So yeah, that's something that I do now. I can't just take trades with the bias or without the bias. It doesn't matter. The small time frame matters because we're looking at scalp, right? If we're looking at swing, different story. We can look at the higher time frame, like the weekly, daily, etc. But in terms of the smaller time frame, we can read that time frame and adapt to the higher time frame. And that's kind of what we do now with biases, right? So yeah, biases, you don't need to have one bias for a day. You can have multiple biases for a day. You can also have multiple plays or different biases for the day as well. That's also fine as well. But again, you don't want to just take trades with only the bias, because there's a lot more you can probably grab in those situations.